In this video, we will try to understand yet another financial instrument in the form of stocks or equity shares. What are stock or equity shares? Are the shares held by individuals or a group. I'll explain this in a greater detail. See, company wants to raise funds. So there are various ways by which company raises its funds. It goes to bank, governments or allied agencies or institutions. One more way of raising the funds is go to the public directly. What company does? It divides its whole capital into small parts. The smallest part is known as the share of the company. So what investor does? Investor purchases the shares. So the quantity of shares purchased, that part of company will be owned by that investor. What do we get investor out of this? Well, investor have two advantages. One, it gets dividends on the shares. Investor is part owner of the company and yet he can do further trading of these shares, that is called as stock market trading or equity shares trading or simply share trading. What is the advantage to company? Well, company raises capital in the form of shares purchased by the investors at a capital. So, what are equity shares or stocks? Well, equity shares or stocks are basically shares held by individual or group, where company try to raise money from individuals or group by dividing its whole capital into small parts. Those small parts of the company are known as share. So investor buys those shares by putting amount against it. What investor gets out of it is basically dividends. He's a part owner of the company and yet he can do trading of these shares under the name called as share trading. What is the advantage to the company? Well, company raises funds through publics and groups where investor pays money to the company in order to buy the shares of the company.